In this episode, we're discussing how to find a good mortgage broker and what you need to be looking for when choosing who to work with. We're also going to explore whether brokers themselves could be disrupted by online banks and portals, what to make of some of our big banks making big moves to lock brokers out of deals, and what matters the most with mortgages. Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Chris Bates, my co-host, and I today are having a chat. And for those of you who don't know, that Chris is an ex-financial planner. He's been a broker since 2013 and now runs Flint after a recent merger with quite a big mortgage broker name. So, you know, he's well equipped to have a conversation along these lines of this topic. So let's just kick off, Chris. The mortgage broking space has become more and more popular over recent years, and even since the Royal Banking Commission, there's the Royal Banking, that's it, the Commission into Banking.
Yeah, that's it.
Yep. Which was back in 2017, was it? Since then, we've gone from something like 60% of Australians using brokers to now over 70%, if I've got that right. How many brokers are there in Australia?
It's a good, today actually we got an email through just a few hours ago, and the broker market share is actually 74.8. I mean, when I started back in 2013, 14, hopefully someone's not fact checking me here, but I think it was circa about 40%, maybe even a bit under. I got friends in the industry that were in the industry when it was 2%, right? And so they've been here for, since the late 90s, early 2000s. Look, I think like a lot of industries, the numbers are sort of misreported a little bit. How many people are actually, writing loans? The MFAA says it's about 19,000. I think from memory, that was probably 15,000 when I started. But there's a huge amount of those that are actually quite inactive brokers. They're not writing loans. They've got trail books that they're just sitting on. And that's not a great strategy, to be honest. They're actually really hurting with that strategy. But I think there's probably about 14,000, I reckon, that are actually writing loans. But an interesting report for anyone that can just type it into Google is the MFAA Intelligence Insights Report. We can put it in the link in the show notes. And it really, they go through, get all the data from aggregators, and the mortgage industry is really, it's not individual license. So a broker isn't individually licensed with ASIC. They have a license agreement with an aggregator, and then that aggregator then gets all the agreements with all the banks. And there's been a lot of consolidation in the aggregator world. There's probably only 3 big ones, but they get the data from these aggregators, and then they produce these insight reports, which really shows how much brokers are actually writing. And you can really learn, that it's like any industry. There's, a small cohort, probably only 5% of those brokers that are writing quite significant numbers, and the rest are really struggling to get the numbers to work. There's a lot that, goes into writing loans, much more than people think.
So let's quickly, I guess, give people an understanding about what the qualification is to be a broker to start with. I think we should also talk about how brokers get paid. You talk about the trailing commissions, and so people can understand exactly how that works. But first of all, you used to be a financial planner. I know that the educational standards for a financial planner are higher than for a broker, and also you have continuing requirements. What's the difference between that and, say, a broker?
Look, when I first joined planning in the UK, it was probably similar, to be honest. I did a course for a couple of weeks, and then I was out advising people. And it wasn't too far off that when I came back from the UK and became a planner. You had to have a diploma, and that was not high enough for the financial planning industry back in 2011. And all the issues that came out in the Royal Commission, and prior to the Royal Commission, also the FOFA reforms in the financial advice, absolutely had to increase the qualifications for financial advice. They were advisors of some of the biggest financial decisions for people. People are going there to seek trusted advice, and the qualification standard was actually really low. And that was purposely low because it allowed institutions to have a bigger selling army, basically. And that's what advisors were. They were sales distribution for products. Look, the advice industry has gone through all those changes, and the qualification standards are much higher now. I'm not 100% up to date with where it's at because it is changing. It's sort of getting deregulated a little bit at the moment. So they went to university qualification, and you need to have a master's or a bachelor's. And I think that's actually getting watered down because advisors have halved. It was 25,000. I think there's 13,000 now. I think recently it's the first time it's actually increased in recent times. For broking, it's still way too low in my books. I think you can even get away with a certificate, but a lot of banks, accreditations and aggregators, they demand a diploma. But a diploma can be done within a year. It can be done potentially fast-tracked with certain training providers. Probably similar to the real estate world, to be honest, in terms of the qualification standard. Does it need to go to a bachelor, and does it need to go to that level? Probably not. But I do think there has to be higher standards that, like any industry, we just need to get better at what we do.
Yeah. And look, one thing I will add in there, that once you become qualified as a mortgage broker, which is governed federally, as opposed to real estate licenses, which are governed state by state and territory by territory. So you've got a federal legislation, you've got to get your qualifications, and then you need to serve as a apprentice effectively, don't you? You have to work under a mentored arrangement, don't you, for 2 years? Is that correct?
Yeah, you do need to do a mentoring thing. You can pay for mentoring, and and I think all of these things absolutely are tighter than they were. But, I do think there's the next level of that is, it hasn't got to that sort of real professional, standard like you would see in lawyers and accounting and financial advice has. You do have to do a professional year in financial advice, which I do think's much more restrictive than it is in the broking world. But, it is a different thing. Broking has to move into becoming a trusted advisor, strategist role, because it won't survive as a product provider and a facilitator role. That's what the digital players can play at, which we'll talk about. But I think the broking world is not only about helping people, get access to money, but are they structuring things the right way? Education around what they're doing with property, not actually buying it, but property educate. It's going to have to start moving up the curve in value. But at the moment, it's still pretty low, to be honest.
So how do you define a good broker? I mean, you've just touched on two things there. You've touched on sort of selling product versus advising. It's honestly, the parallels between that and buyer's agency are quite stark. The more you say these things, the more I think, yep, same with buyer's agents, right?
It's true.
There's buyer's agents, you just think the deal is all that they should be doing, as opposed to advising people as to what's a good asset and how to carefully and strategically buy that. And it sounds like a little bit the same when it comes to borrowing strategy. How do you then define a good broker? How should consumers sort of go out there and go, well, look, 75% nearly are using brokers now. There's lots of them out there. I know that they're not all good. There's a lot of good ones, but I know there's a lot of really shit ones. So how does the consumer work it out?
Look, I think it takes a few years for the broker to, like in buyer's agency, to be honest. I think it's even slower in buyer's agent because you do way less transactions. But I think it takes a few years for people to start to get their knowledge up from just providing products and rates and things like that. A good broker, that's a ticket to the game thing, right? A broker should know what could be the right bank for you and what's the right rates. And, then they get too good and they go, well, I know which bank's going to look at your position more favorably and what's going to give you a better experience. Yep, great brokers. That's kind of like a lot of brokers can achieve that. A lot of brokers generally do care. They want you to achieve what you want to do. They don't want you to make any major mistakes, and they will put you in what they think's the best option for you. And so I'd say that's a good broker, knows product, know rates, know how to get the loan approved, isn't going to, lodge a loan and just throw a mud on the wall approach. So they've got a bit of experience. They care about you. They question your decisions. They take the time to educate you on things. They don't just validate and facilitate what you want to do. I think the next evolution of brokers, and I think a lot of brokers stop there, if I'm honest, because they don't want to take that leap, because that could make, A, they've got to learn and educate themselves, but B, they've got to potentially challenge what the client's doing. And this is when they start to become, well, I actually know a bit of knowledge here. I know how you're going to you want to structure that loan principal and interest, but you really should do interest only, or the other way around. Or you really should borrow at 88% and pay LMI and, rather than trying to get to 80, or maybe you should, sell that property to potentially upgrade your home rather than buying another investment property because you haven't thought about that. So it's when you start to become knowledgeable in the decision a client's making and you make a choice as a broker, whether you actually want to make that step into become more of a trusted advisor and challenge what they're thinking, not just be a validator and a facilitator. I think the other thing is that they need to sometimes not turn the other way. If a client's doing something that they is not a great decision, is actually stopping them and questioning them. And I think that's when you actually become more of a trusted advisor in their mind. You're not saying you know all the answers, but you're at least identifying things and blind spots that people are doing and challenging what they're doing. And then educating yourself or finding other experts that can help your clients. And then you start to build a real relationship with clients, a client for life. And so I think that, I do think brokers aren't moving in that direction enough. If I look at even some of my friends that are some of the biggest writers in the industry, they're kind of teetering in that, but they don't want to go all in. They sit on the fence a little bit. But I think the industry is going to demand that more and more, because the ones that are making those moves are the ones that are not just finding it easier to get clients, they're getting more referrals, they're keeping clients, and I think they're building better businesses.
One of the things that struck me as you were saying that, really, it sounds to me that if you're really looking for how do you choose between one broker or another, it's really the quality of the questions.
Yeah.
If they are asking insightful questions that then open up conversations and really then educate you as to other possibilities you perhaps hadn't thought of, then, I think about my various brokers that I've worked with over the years, and the ones that have just done things. Sometimes they've just done things, and then afterwards I've discovered them after I've actually signed up to a new loan, and there's been features in there that I didn't even know I'd actually signed up for. Yeah. And then they're educating me afterwards, and I think, I hate that. Yeah. I don't like to discover things after the event. And as opposed to the ones that sit down and really go through the pros and cons of various pathways, and also, as you say, challenges, because a lot of us think we know it all. We go in and go, I want one of them. And hang on a minute, tell me why, what's your thinking? Why are you going down that path? Have you considered this? Really? No, I hadn't, So I think those brokers that really get the light bulbs going off and get you thinking. The other thing you touched on there was some of the biggest writers aren't necessarily going down this path. And I know that, I see lots and lots of mortgage brokers' websites, and nearly all of them have got loads of gold and silver. When I say nearly all of them, lots of them have got gold and silver badges and medals and all the rest of it on there, and awards. Now, I know that you've won prestigious awards, and I know the similar thing in the buyer's agent space and the real estate agent space. A lot of the awards are given for the volume of business that is done, the transactions that are done, the deals that are done. It's not necessarily an award for the quality of those deals or the quality of advice. It's really about volume and profitability, perhaps, or revenue. You're an award winner, right? And obviously you pride those, you display those badges with pride, but they can mislead consumers, correct? Can they mislead them just as much in the broking world as they can in the buyer's agent world?
I absolutely think they miss people in the buyer's agency world, just knowing who's winning those, and then knowing the buyer's agency I know and the gap. Look, I do think there's a lot of unsung heroes in the broking world. I think there's a lot of great brokers that don't get the recognition that they deserve, just purely because the numbers that they're writing aren't high compared to what a Sydney broker's writing. I think of a really good friend who's an amazing broker. I've used him actually as a broker when I couldn't write my own loans when I was early in business. But, and he's amazing customer service. He genuinely cares. He gives good advice. He challenges people, but he's in orange. And he's just average loan size. He does $200,000 loans. He's an unsung hero of the broking world that won't ever get the awards because of the volume. However, if you look at when I do look at who's, not just in the category I'm in and all the other business, I do think there is a desire for the top businesses to try to achieve those. And I do think, the quality of those people in those awards is usually really high. Maybe they're not set 100% into this trusted advisor, but what they have done is they've been really good at building a niche, a team, and great at customer experience, and have been able to deliver that in maybe an innovative way, and they may be able to do it in a community or a different way, and their client outcomes are, because they're appealing to different markets. And so genuinely speaking, when I look at those awards and look at all the businesses that are winning them and are achieving, they usually are great businesses, in fairness. However, I do see that in the buyer's agency world. I do see a lot of new buyer's agents haven't been doing it very long, getting all these awards, but then I compare that to what I know from other buyer's agents. I'm like, oh, I think, have they really got those runs on the board compared to these guys? And but yeah, I do think there's a lot of people unsung in the broking, just don't enter the awards. But it's not as many as I would surprise. There is some, like, I find out about a business that I find out about a big business that I haven't heard of before, and that was my take.
Well, let's sort of get to how the awards are awarded, because in the buyer's agency space, you got to nominate yourself, right? And it is part of people's marketing strategy, and lots of new buyer's agents are encouraged to enter awards because it's their way of getting credibility. And, it's one of the reasons I really dislike them. And also, I know the criteria of those awards because I've read a lot of the judging criteria, and I have judged some of the awards, not the ones where they have this criteria, but the criteria is very much around transactions. And if you can show that your transactions have increased year on year, then you're more likely to win an award, which is dangerous in the buyer's agent space.
Yeah, absolutely.
It might be good business, but it's dangerous to measure success on transactions. But in the mortgage broking space, however, you got three main aggregators, big aggregators. My understanding was that the aggregators give the awards out and so they've got all the numbers. You don't need to enter an award if they can basically look at the numbers and go, oh, right, well, that business has written the most amount of loans. Is that the way it works, or do you still have to enter?
No, there's a few media companies. The Advisors one, MPA is another one, Mortgage Business, which is part of one of those other networks of publications. Then you got the aggregator awards, which you're right. And so it's a lot of these media publications. So the Advisor does a couple of big ones at MPA. And they are a bit mixture between settlement numbers, but also that you do answer some comprehensive questions. Like, we actually pay a company that takes what we say to then they package up and copyright it, right? It's true, but they present it in a way. And, there's not just one question, and it's usually about 60 to 80% probably the numbers and 20 to 40% what you actually say. Aggregated awards can be changed. Like, connectives are purely based on numbers, and there are a few awards that are the aggregators behind the scenes decide who they believe have done really well out of their network, and there's a lot of unsung heroes in those ones, to be honest. Some aggregators do it on lots of metrics like AFG, not just on settlements, actual, how many clients are leaving you and how many different clients did you actually help and what were the customer outcomes and compliance. And so I think they try to do it a little bit more fair, I would say, than just numbers. I benefited from those when I was top advisor broker at Connective, right? So I benefited from that other model. But I absolutely see the benefits in those more holistic ways. Then also the awards can be not just around numbers. It can be like customer service or community engagement or wellness. There's all these other awards as well. And you're absolutely right, though. If you don't put your application, if you don't prioritise it, you're not on there. So there's heaps of people who would win those awards if they apply, but they don't apply. And so it is one of those things to take caution on. But we're also then in the same vein proud of what we have achieved. And I think it is, a good idea for brokers because the questions they ask challenge you to think about what have you actually done for customers this year that's different? What have you actually done to increase your business? And actually putting that into 200 words can be difficult. Yep.
So also, let's talk about how brokers are remunerated. I know that on the whole, it's not a fee for service, but there are some that, there's some that are charging fee for service, but it's a bit conflicted, isn't it? Because I remember with the Royal Banking Commission, Royal Commission into Banking and Finance, a lot of the stuff written about brokers at the time was really accusing them of being conflicted because they are remunerated mostly on an upfront and a trailing commission, and the behaviours that can result as a result of that. Do you want to sort of explain how that'll work so people can understand?
Yeah, if I'm completely frank and transparent, they're much better now than they were 10 years ago, right? So when I joined the industry, there was absolutely gaps in terms of the way, like conflicts that just didn't need to be there, right? There was differences in the banks in terms of what they would pay you in commission. And, yes, as a consumer, as a broker, you wouldn't recommend that bank, but it was the way it was back then. There was actually slightly the way that the trail commission was that you'd actually go, oh, if it's like for like and it's close, I'll go with that bank. And because it was very similar for a consumer, but it would actually give a benefit to the broker, those things all got stamped out, right? There was things like volume-based rebates. If you wrote too much with one lender, you'd get paid more money. That you'd get paid on cash out, even though their money hadn't been actually borrowed, like it wouldn't. So those things have changed, net of offset. So what basically is now, if a broker recommends a bank in the residential space, they're pretty much going to be paid the same commission pretty much across every lender, 0.65% upfront and 0.15% ongoing. So, a $500,000 loan, the average is like $600,000. Let's just say $600,000. The $600,000 broker would make about $4,000 up front, and then every year would make about $600 a year, right? However, if that client leaves in 2 years, depending if it's 1 year or 2 years, they might have to give 100% or 50% of that back, right? So you have to state, so they have to give that money back. If after 2 years, there's no clawback. And also, as the loan goes down, that $600 a year goes down, obviously, as well, because it's a percentage based on their loan amount. But there isn't like if you went to one lender, you'd get paid a lot more. That absolutely was the case back in 2013, 14. Banks would do bonuses and things like that. And the AFR did an article saying that was the case now, and we don't disclose our commissions. Absolutely, we disclose it. It's always been the case, even all the way back to 2013. It was when I joined, you had to disclose commission. So that's all nonsense. The commercial space is a bit of a total other world. And it's usually, sometimes you get money from lenders, sometimes you charge them application fees, sometimes you split that application fees with the bank, sometimes you don't. Like it's a whole other world, and it's kind of under different rules. And asset finance is very similar to that as well, so cars and things like that. But in the residential lending space, which is predominantly the market, no broker would recommend a bank that's a higher commission. It just doesn't really exist. If it was, it'd be some type of weird third-tier lender who probably wasn't offering a great rate, and it probably does under 1% market share. And that broke, and I actually don't even know who does that, to be honest. Or that 99% of loans that are lending would be at the same commission, and all those things have been tightened up.
So given that it used to be that, one bank might offer a much more of an incentive to brokers to go with them versus another, and that seems to have been taken away, and it's a level playing field. Is that in some way collusion between the banks, or is that been legislated, or the regulators stepped in to govern that? How has that sort of come about that it's so, measured?
I think it goes back to there was a little bit of in that 2014, 17 boom, right? Lending was going off the charts, and, that boom was, a lot of investment driven, a lot of interest only loans, a lot of people leveraging up. I was blown away when I first did calculators, because I was doing meetings with mortgage brokers in 2012, 13, but it wasn't probably till 2014, 15 where I started to really play with borrowing capacity and start getting under the tin in the broking world. And I was just like, wow, I can do that. Well, if I actually use NAB, I can do this. If I go to St. George, I can do that. And there were all these holes. And you could absolutely then, change your strategy and go to different banks and borrow a completely different amount, structure things differently, get different experiences. And I think back in 2015, I'm trying to remember, but I remember just one of the banks changed, hang on a sec, we can't do that at NAB anymore. Hang on a sec, we can't do that at Westpac. And each individually, their borrowing capacities and these little holes in the way that they assess loans started getting tightened up. And I think it was APRA basically say, look, and borrowing capacities completely changed. Not just with the interest rates going down, but all that excessive lending in that boom and those huge multiples and just being able to borrow and borrow and borrow. It's nowhere near like that today. And it's really, really tight right now. And yes, the banks are actually going a bit more risk on, if I'm honest. I've seen a bit of a change where they're doing things that will increase how much they can lend to people just because how tight lending is and how high rates are compared to where they were and all the buffers. And so, but nothing like it was in 2013, 14.
I'm on a personal mission to help more people make better property decisions. And you can find out all about what I'm working on at veronicamorgan.com.au. And there you'll find resources for first home buyers, details about my buyer's agent mentoring program, access to suburb help for investors, or if you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers.
If you're thinking about buying your first home, upgrading to a new one, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out via our website, wealthful.com.au.
So there's a few online players in this space, and I know PropTech's probably all over it. They're thinking, oh, okay, this is amazing. You've seen this massive disruption. Brokers have disrupted the banking model, if you like. And is the broking model now ripe for disruption in the next wave? I mean, is there AI that can come in here and basically make you redundant? Are there online solutions being offered to buyers? What do you see on the horizon? Is there anything that's happening now that you think, oh, this could really change the landscape?
Absolutely. And a lot of brokers, if I'm honest, are a bit ignorant to this. They see that the value that they provide is sometimes around selecting products. That can be automated. It genuinely can. Selecting a product, they think it's about getting the loan approved. Well, that can be done. And I think a lot of what won't be done is the real advice and the personalization and the real conversations across someone's property journey. It's going to be really hard, to automate that, because people do want to have those conversations. But absolutely, the customer experience is getting disrupted. And I think it's and the banks. COVID was great for brokers. We spoke about that at the start where you mentioned their market share's gone up because the banks had to. They were very much dragging the chain on purpose because they wanted you to have to go to a branch, and so they could sell you house insurance and sell you a credit card, and and make it hard for you to refinance. Right? It's a painful experience. I'm not going to refinance. COVID changed that. We've got digital loan docs. Can all be done online, virtual VOI. You don't have to meet a broker face to face. All these sort of things have been great, and what we're seeing is the first tier of digital mortgage brokers hasn't really worked. There's been a few players that have sort of come and gone, and I think they were just a bit early. And I know some of the guys who have started these businesses, and so all due to respect to them, I just think it was a timing thing. The next tier of digital mortgages that are coming out and digital mortgage brokers are much better. There's some, and it's more of a better timing. There's some great players that are coming out, and so a lot of brokers need to be worried that if a customer wants to deal digitally and get a better digital experience, then and you're not keeping up to speed with that, a customer is probably going to start to go to these digital lenders. Look, I think whatever comes for consumers, digital loans. So you've got some, TikTok, which is now it's called Timely, Yards. We've got Athena. We've got Volt. We had 86400. We had Ubank. We've had Timely of now powering Upbank, Qantas Money, NRMA Money, etc. And they keep coming. Even this week, CGA released a digital product. The thing that they've all realized is the digital loan experience is a slow-moving beast, because a lot of people who've gone through those experiences are getting, their loan goes through some of the time, but a lot of the times the loan won't fit their policy and they get a decline, it affects their credit rating, and they've got more questions, and they start the process and they don't go ahead. And this is speaking to people who run those industries. It is coming. People are and the policies are getting better, but they're actually now moving to partner with brokers. So Ubank's now on the broker panel. 86400 got bought by NAB, and so we're getting digital loans, and we're going to be able to give you those digital experiences that you would get with a digital lender. But we're also going to be able to stop you lodging it if we don't think it's going to get approved. We're also going to be able to. And so you're going to get fast home loans and a much better experience, but you're also going to be able to do that with a broker who's able to access 10 digital lenders. And so we're not too concerned about that, because we know that as broker market shares, they try to go B to C and then they just don't get traction and then they end up having to partner with brokers. And that's happened time and time again. Yeah.
Interesting. Well, I think it's interesting too that thing about, because, I know that's a question I've seen in a lot of forums, is what if I apply for a loan and I get knocked back? Does that affect my credit rating? And obviously it does. So what you're saying there is that I guess a broker who's giving advice can look at you as a potential customer of a bank to say, actually, you don't look like a good customer at the minute, and you've got to do X, Y, and Z, I guess, to get in the shape so that you can look like a good customer, or go to a different lender. That's, I guess, that conversation needs to happen, doesn't it?
And also, like, the conversation is there. So are you there as well? It's just, you sort of, it's interesting. If you just want to refinance and get yourself a better deal, okay, I'm happy to go to Disney. I'm not looking for any value add. But if I'm thinking about buying a first home, like, what deposit should I use? Should I stretch? What is my max? Could I borrow more at a different bank? How do I structure loan? Do I use LMI? If I'm looking to upgrade my home, that's complex. Do I use bridging? Do I don't use bridging? What can I do if I don't sell? How do I structure a loan? Do I go a longer settlement? Am I going to, like, that's emotional. Like, that's hard to digitalize. Even investing. I mean, I just jumped off a phone strategy call with a client. He's got a house in Sydney, investment property in Perth, investment property he bought with us up in Brisbane, and he wants to upgrade his home. And I've challenged him more carrying his home in the past, and sometimes people aren't ready till they're there. All of a sudden the kids at school and they're like, actually, no, we do need to upgrade our home. So we're, and that's a complex thing, because he's got to sell his home, he's got to sell his place over in Perth, take the money while he can, and do that. And that's just hardly done digitally. And so I think that's the challenges they get, is the client has questions, they want to speak to someone, and they're going to speak to a product provider who can't give them that advice. And that's the secret sauce great brokers will have over any type of digital lender ever.
It's a danger zone, though, too, for consumers, because you do know a lot about property. Obviously, we've been doing this for 6 years. I know what I've learned from doing this, and I've already started with a high level of knowledge in property and experience, because I've been a real estate agent now for 24 years, right? So I started that with a really high degree. I've learned heaps about the broking space and economics and lots of other things I didn't really know a lot about beforehand, of sort of because of the people that we've been interviewing in this podcast. So you know a lot about property. You understand what's a good asset. You understand the opportunity costs of different choices. You understand the risks. And I come across a lot of brokers who think they know a lot about property, but they're well and truly outside their lane, because, from their own limited experience or their own limited view of the world, they've formulated various theories or whatever, but they are ill-formed and ill-informed. And that alarms me, because, of course, property advice is an unregulated space. And, for brokers who want to add value and want to, increase their relevance with clients, to give that advice and be trusted advisors, that does concern me somewhat. Because I know, and I've spoken to lots and lots of brokers over the years, some do know a lot about property, but probably more don't. And so that's something I think that consumers need to be aware of. And I guess if you're listening to this, you might have your little red flags already. You might be well equipped. Or if you listen to this podcast and you have done for long enough, you may be well equipped to pick out those that don't really know so much. The other thing about some brokers that I've come across, and this is the most alarming, is when they recommend a property itself or a property type. And often when this comes into the first home buyer space, I come across where brokers are very, very ready, and they just assume that the first home buyer wants to know about grants, which many do, let's face it. And they assume that the first home buyer is going to base their decisions around, maximising the free money they can get from a government. And they're going to suggest, okay, this is how you get into a house and land package, so, and then some of them actually get paid commission by developers and agents, because, am I correct in saying that they need a real estate license now to do that? Is that correct? But I'm coming across this.
I don't actually know. We to actually get the comms from developers, I do think that's an issue. And I think a lot of planners were getting around it by doing that. They were getting up real estate licenses with, and that could get them around all the rules of financial advice, and saying, no, they're just recommending to speak to this company, and then that company gets the commission. And fortunately, I actually went for a couple of jobs of those back a long time ago, and they actually went under, some of these companies. So I like seeing that. But good. I think you've got to be. I do think you've got to be careful with brokers. Look, I don't think you need your broker to do everything, right? So if you are educating yourself and you know what you want to do around your property decisions, you can use a great broker just as a tool to help you do the numbers you need to do. If they're good and they're a great relationship and they come back to you and you got a lot of trust in them and they don't let you down and that they do a good job for you, that's fine. Like sometimes you don't need them to take that role because you've educated yourself and you're getting that advice elsewhere. But you're right. You've got to be careful if you are going, you're getting that advice. Is that actually what they believe? And they've just got confirmation bias. And they're just doing everyone down the same model. And they're looking and they haven't got any awareness to, okay, yeah, that's worked potentially, but how's that worked in reference to what? And how does that compare to other options? And what could they do? And I think what ends up happening is buyers, mortgage brokers have done the right thing and tried to get other experts, but then they haven't done enough digging and done due diligence for the experts they bring in. And the consumer then automatically assumes, well, they brought them in, they recommended them, they wouldn't work with them unless they were good and their clients got great outcomes. And then they just couldn't follow their conveyor belt. I'm trying, that's one of my little missions. I've already spoken to MFAA about this and Reba about this, and to try to join those two worlds better together, because a lot of mortgage brokers don't even know what buyer's agents are, or even don't even know where to go to speak to a good buyer's agent. I want to sort of give them insights on how to actually build a network of buyer's agents, not just have one that they refer all their clients to and go, well, she'll be right, mate, which is unfortunately what a lot of them do.
And another side of that, yeah. And also, the temptation is if they're a volume-based, transaction-based broker, they're going to align themselves with volume-based, transaction-based buyer's agents. And the pair of them are going to just rub their hands together and love all these people who aren't discerning enough and don't engage enough critical thinking to really look at that. Actually, what am I buying here,
Yeah.
The other thing too that I come across with some brokers is, a lot of buyers will say to the broker, well, what do you think is a fair price for this property? And then it's very tempting because CoreLogic give, brokers access to RP data and various other tools, and they press a button and get an automated valuation model sent to them. I've seen lots of my clients come to us, go, oh, my broker gave me this for this property. I'm like, well, okay. Now we're going to do our pricing research, which will be a hell of a lot more accurate than that. But we have to dismantle it before we actually can, because quite often, even our clients who are really educated, they will err to this printed document from a database, basically. And it's like, no, that is rubbish. And I'll tell you why it's rubbish. And if you rely on it, you're going to either overpay or underpay, or you won't get it because you'll be offering not enough money. The accuracy rates of those AVMs is I would say in like almost in single digit percentages. Like I've done many case studies where the spread on them is just far too wide, and the actual accuracy is around about 10% mark, right? So how does a buyer, I guess I always say to people, avoid asking the wrong advisors the wrong questions. So the mortgage broker is not the person to say how much should I pay.
Absolutely.
But people will do that, obviously.
We get it all the time.
So I guess, from
it's
how do you handle it?
I absolutely straight away I'd come back and I could almost, I don't have a templated response, but I could have a templated response. And because it is the same thing. Ultimately, to know the value of property is really difficult, and expecting a broker to know that is just it's just completely not possible. Automated value model to know it. I mean, maybe if it's a really high density apartment, there's 100 sales similar to that. How many properties are like that? Very few. Every other property's got so many things that you need to factor in. So we could do a whole episode on that, right? Which you do with clients.
We could.
And it takes hours and hours and hours of research, knowing the local market, etc. So I basically explain that to clients, said, we can't tell you that price. And kill it there and explain what they need to do to know that price. But, I'm not blaming the consumer here for just asking the question, because they do want to shortcut it and they think, well, you know about property, you can tell that.
Yeah.
But I can't, no one can tell you that in minutes, right? And that's the charge. It's one of those things that I can see it's frustrating for you though, because you have to unwind it. And I have to sometimes do that when conveyancers and, property solicitors do that around people buying properties, and they just don't understand the realities of how hard it is to buy.
I know.
Sometimes sign 66 Ws, and you can't get formal approval before an option, and
Yeah.
You know, they even know that, and they still stitch up us as brokers and make our life really hard. Off the line, I can have a call with them and say, that's not possible. That they need to do this. And you've created all this work so you can satisfy your legal obligations that you've warned them. But what you've done is actually done the opposite. You've actually, done something that's not in their interest. And so that's one of the things that, obviously frustrate you. And that's the thing that frustrates us as brokers when conveyancers do that to us.
Yeah. One of the things that frustrates us with conveyancers and lawyers is when they send off requests for contract changes before we're ready for them to do so. It's lovely that they're responsive and enthusiastic. You go, hang on a minute, we don't want to show our hand yet. Can you just hold fire? Are you ready to go? When we're ready, we'll let you know. It's all very carefully calibrated in terms of a negotiation strategy, an offer strategy. That's a whole topic for another conversation. Now, recently, CommBank made a play really that looked like from the outside that they want to lock brokers out of some of their best rate deals. Can you tell us a bit about that?
Got to be careful. I actually don't know the rules around defamation and what you can and can't say and about companies, right? So putting CBA to a side, what my observation is of the banking world is that they want to have their cake and eat it too, all right? And certain institutions sometimes forget that what actually is driving their business and where market share is and what consumers are deciding is actually to go to brokers because they get benefits of using brokers and market share brokers. And they sometimes forget that. And they do things that are actually making it more difficult for brokers to work with them. And it's basically destroying the trust of brokers to send business to them, because this is one play where they're saying, well, this is competition to you brokers. Some people would say, well, that's great competition for brokers. There's other examples when, customers walk into a branch and get a better deal than if they go to a broker, but they're actually meant to be partners with brokers, not undercutting us and creating issue for us. There's issues where, we'll do all the work and they won't reprice the customer. And then when they finally decide to leave and send a discharge form, they give them a good deal and they give them a cashback, and they just completely destroy a broker. And this is just another example where we believe that banks are, overstepping the mark to compete with brokers. And there's been certain digital products out in the marketplace that have not been advertised the right way, and we as brokers have gone, hang on a sec, that's just not true. And there's even one out in the market right now that is, we believe is false advertising, right? And that creates a lot of issues for us, because we look at that lender and we say, look, you've said things in the past in royal commissions. You consistently do things that aren't supporting brokers. And then you make our life difficult when, on a day-to-day basis. Do we want to, if we've got a choice of picking lenders, do we want to support that lender, or do we go to a lender that's going to offer maybe not a great experience for us as brokers? Because it's got to be, we're going to have to deal with it, not as an experienced predecessor, and maybe that takes a little bit longer, but do they support us as business? And I think this is a real issue for the banks. The banks have got this arrogance around them that, we've got this monopoly, whatever you call it, oligopoly on the market, and they've got the control and they can buy all these small lenders, and like ANZ buying Suncorp recently. But then they just don't look at the stats and go, what's actually growing their business in their loan book, and where's consumers going to? And I think this is what's happening at the moment. They're playing out. They're trying to, if anything, slow down the growth in broker, because as brokers grow, they're losing more and more power, and they're trying to throw brokers under the bus. But ultimately, what brokers are doing are driving down bank profit margins. Now, unless you're a bank shareholder and you've got all your wealth in bank shareholding, you'd probably want bank profits to get better. But if you're an Australian consumer with a mortgage, what you want is a better deal on your mortgage, and brokers are driving that. And that's why the banks are upset. And so we're not concerned around this. We actually just think it's another poor play at a business level by a leader that forgets that they're biting the hands that feeds them, and they're upsetting, and I think a lot of brokers have stuck to using these lenders because they had a better system and process. But I think it's getting more and more out on the street where brokers are going, look, we've had enough. We're not going to support this lender anymore. And we're going to go, and they're going to disrupt our processes and how we work with our bank and all and go work with lenders that actually care about us. And I think it's just another misstep. The good news is that The issue our brokers had in the last few days, and I think it's timely we were doing this episode, is that there was a lot of false things that came out, and it was a banking PR campaign. You couldn't call it anything else, and it was pretty much a carbon copy of what happened in the Royal Commission and complete lies about the realities of the broking world. And it was in a very, the AFR, right? A prestigious publication that you would think would fact check, and it completely wasn't. And I think that's what brokers are very upset, is it wasn't in, say, a paper that you might expect things to not be the truth. And that really frustrated the broker world.
Interesting, isn't it? Because, as a consumer as well, I look at these big four banks and I can see the ways in which they've been very competitive at various times in trying to win new business, and how as an established client, you pay the loyalty tax. And they really don't seem to get this concept that it's more expensive to get a new client than it is to keep your old client. And it's a little bit the same, I guess, with how some of them seem to be taking on the broker channel. You guys have flourished really, I guess, in the face of, the banks would not have wanted you to flourish ever. But, it's a bit like Uber, perhaps. There's an opportunity that has allowed a disruptor to come in because of the lack of service or the lack of poor experience in the first place. So it's sort of interesting. So to wrap this up, do you want to sum up for us what matters the most with mortgages? What is it that borrowers should be focusing on, particularly when they're having conversations with a broker?
Absolutely. Your structure matters more than your rate, right? How you structure that loan, you might not realize at first, but it gives you so many different options in the future, whether it's tax or gives you a buffer or, protects you with your repayments. And, you really want to just get that structure right. A great broker should make recommendations on what the right structure is for you. And, listen to that advice. If it's good, and obviously you've got to be careful, but you might think, oh, they're trying to recommend me a bigger loan because they get paid more. No great broker is doing that. They're giving you the best structure because it's the best interest for you. Like it's like trying to say to an agent that, ultimately isn't trying to get you the best price. Yeah, okay, some agents you could argue that, but it's not great for them if they have a sale that's 2.1, everything in the area is selling at 2.2, for example. They want the 2.2, right? Maybe they haven't done that extra 10% hard yards. But ultimately they do want the best price, and they get paid more. And so, they want it for more the reputation issue. So listen to the broker's advice around structuring, take some time to think it through, the pros and the cons, and don't just go, oh, I'm going to set the line up this way because I think it's the lowest debt. Just be careful, and know that rates change. Yes, the rate might be better today, but banks are always constantly changing their rates with, loyalty tax you spoke about, which is a huge issue. They can change their rates at any point. What's happening right now is you've got to be careful. Rates could fall when interest rates fall, and the banks might not pass it on. So we've got another podcast now, so I'm going to wrap it up today, Veronica. I appreciate the chat, and the broking industry's got a lot to... We're up for this challenge, to be clear. So the broking industry is not saying we're resting on our laurels. We absolutely want to take our next evolution and become trusted advisors for you Australians. So thanks for the chat, Veronica.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.